So it's FOMC day. So those of you wondering how you've seen me twice in the space of 2 hours, well, it's that time. We got Joe Powell talking in a couple of minutes. The rates remain unchanged, and so far things are nice and flat. So we're going to take a look at a couple of things around this FOMC. We're going to be watching the charts. Are we going to get some longs? Are we going to get rinsed? What is coming up next? I've also got DJ and Dave flying in. He's coming to join us. We might have Uncle coming as well. And I've got James sitting in the back as well. He might have some action for us. So, yeah, let's get right into this. And for those of you wondering what's going on here, this is Crypto Live. So you can normally catch me on Banter Plus, and I'm there Monday to Friday doing this type of trading content. Monday to Friday, you'll find me there. This is Crypto Live. Make sure you are liking and subscribing, especially those that have followed me here today. I see 𝗗𝗬𝗟𝗟𝗢𝗪 says, hello again, Sue. Hello. Let's take a look. What's going on the 1 hour here while we wait? So we know we've had no change at the moment. So if we go into Forex Factory, we can just confirm that's a nice little website for you guys to use if you want to see what's going on with all these events. You can see we came in at the Fed funds rate remains unchanged. Okay, so from that perspective, all is well. The big question has always, or was always going to be this week, how dovish or how hawkish is Powell going to be? And, is Uncle Donald going to sway him the way we want him to? So this is Banter Bubbles on the 1 hour that I'm tracking at the moment. And obviously, Fartcoin is the #1 pumper at the moment. I mean, how ridiculous optimism. Is that a sign that maybe something could be happening with some interest in ETH? So we know Trump and his boys and the World Liberty Fund are buying tons of ETH. I saw today they bought another $10 million worth. They bought 15 the other day. So those guys are stacking ETH at the moment. So there could be some interesting things coming from that perspective. And ETH is one of the charts we're obviously going to watch today. But just in terms of what to expect and what we're looking at. If you've been leverage trading over the last while, and Andy says, Dylan, on time, mate, fuck me. Bro, I'm normally on time, am I not? This is how it's been. Now, I played this earlier on my show, but this is essentially how it's been the last couple of days. As an altcoin trader, it's been a wonderful thing waiting for this FOMC. It feels like every week we've got something to wait for. Some critical moment is going to happen here. It feels like as degen traders, this is exactly how things are feeling for me at the moment. So let's take a look at a couple of FOMC things. So we saw Uncle Donald here. Now, what we do know is that the Fed is a total independent. They make their own decisions and they theoretically will not be swayed by politicians. So whether you're a Democrat or Republican, they don't like to be told what to do, and they don't need to be told what to do. But we saw Uncle Donald the other day making a couple of comments. Let's see what he has to say.
Will come down.
You said that you would demand that these interest rates come down. Well,
I would put in a strong statement.
Do you expect the Fed to listen to you?
Yeah.
So this was his view the other day. And, I mean, look, I think it would be a shock if they really did drop these rates. What we want to see now today is a dovish Joe Powell, because if he's coming out pretty hawkish here, if you've been an altcoin trader and you've seen some of these alts hitting some big levels, well, you're going to feel a burn that you didn't think was possible if things come out a little bit darker here. And what was that comment there? We are getting rinsed. Okay, well, let's take a look at the charts. Let's see what is going on, and let's try and track. We're not getting rinsed just yet on Bitcoin. So Bitcoin's relatively flat at the moment. Let's just check into our presser. When are they going to start here? They're starting in a few minutes still. I think we have to wait. James, what 2:30? Okay, so we got some things to talk about.
It's 25 minutes yet.
Okay,
you're on the wrong charts though. You need to get on the 1 minute charts. The rest of these degens are looking at. Looks like shit.
I got some fives, guys. I mean, you guys need to chill, okay? We got 30 minutes till the press conference. All we've got so far is 100% of what the market was predicting we're going to get. So congratulations. But on top of that, we've had the altcoins bleeding into this news that everyone was expecting. So far the market's got what they wanted. The secret's going to be what he's going to talk about in 25 minutes time. Okay, can't stand another dump. What is going on here? What? Another dump? Okay, let's go. So we're gonna check into this, and hopefully Uncle's gonna join me as well. He did message saying he might be jumping in, so that'll be quite pleasant. And we are waiting on DJ and Dave. He's gonna join us in a couple of minutes. So just in terms of some more things. Now, this is first I want to show you the Canadian side of things. So the Bank of Canada has announced the end of quantitative tightening. Okay, so that is let me get on my screen here. This is a problem. There we go. They've announced the end of quantitative tightening today. Now, we've got one of our top researchers and one of our front runners, guys, 𝗙𝗢𝗟, dropping some tweets today saying the banks expect the Fed will take longer than they previously anticipated to end QT, which is that quantitative tightening. So market will be watching Powell, how he responds to questions related to risks of tariffs, inflation. Trump wants lower rates, Fed independence, restrictiveness of rates, guidance about future rate cuts, path of QT. So this is going to be one of the features we're going to be watching. If Powell starts talking about QE happening, pretty soon, then I think the market is going to start pumping and things are going to be good. And I see the statement's been released. They removed the reference that progress in being made. That is relatively bearish. Okay, AS, keep that coming through there for us. That is not a good start. Okay, as an altcoin trader, we do not want to see that. Let's take a look at our charts. Okay, so on the top right hand side, we're looking at the Dixie. This thing is absolutely ripping now at the moment. These are 5-minute charts, so try not to panic. And then on your left hand side, you can see Bitcoin on the 5 minutes, a little bit of a downside candle, but so far the market's got what they want. So we can't be we shouldn't be overreacting either way at the moment. Okay, so dollar spiking, S&P relatively flat, and Bitcoin a little bit down at the moment. So we'll keep going. I see Chaos is saying 23 minutes. Okay. While we hanging around waiting for all of this fun, guys in the chats, let me know, if you want us to look at a couple of charts for you. Let me know how you guys are feeling, and maybe we need to get some kind of poll up here. It's so unfair what these bastards are doing. But do you just want your bags to go up there, Kai? Is that what we want? Look, we'd like that. We'd like that. Okay, so we're gonna wait for this presser. It's coming shortly. So hang in there. Let's see what comments you guys want. What tokens you want us to look at the moment. So 𝗬𝗢𝗟𝗏, we did cover 𝗬𝗢𝗏 today. Let's look at that. I covered it about 2 hours ago on Banter Plus. Let's see where we are with 𝗬𝗢𝗏 at the moment. So this is my plan, and this is my 𝗬𝗢𝗏 situation on the 12-hour for anyone waiting on some 𝗬𝗢𝗏 action. Now, this is subject to a relatively dovish Powell. Then we are looking for a bounce here. So for me, anything down to about 3.4, as long as we're closing above that region, we should be okay. And the magic prime oscillators that I use, you can see they're telling us on the 12-hour there are signs of a possible reversal along the way. So we're hanging in there on 𝗬𝗢𝗏, and 3.5 to 3.4 is where we want to close above. So if there is a lot of drama in between and we get a wick down, you don't want to panic out too hard, because we might get a situation like that where they start pushing us back up. And Thomas says, will AVAX hit the entry? So the AVAX entry target there is about 30 is what we're looking at. Anything 29.5 to about 30.5, I think, if I remember correctly, is what we're looking at on AVAX at the moment. So anybody sitting in an AVAX position, there could be something coming there for you guys if we do get a little dip there to the downside. Let's take a look at a couple of other charts here. What are you guys asking for? NEAR. Now NEAR looks a bit filthy at the moment. I was looking at NEAR earlier today. Let's get out our NEAR chart here for you guys and see where we are. Okay, so NEAR is under pressure, as you guys can see. So this is your NEAR chart on the daily that you're looking at, and there's 2 levels you need to be concerned about for NEAR. Those are 4, and the next one is 3.6 to 3.4. Now that is going to be some filthy talk out of Jay Powell's mouth later today, and that will get us 3.5, 3.6. Somewhere around there for NEAR, where I think we'll get a big bounce. So, but right now, what you need to worry about, any further weakness, 4 is going to be a number of interest for you guys. So any NEAR traders there, that has got that's pretty much what you're looking at. And then I saw Render. Now we covered Render on my show a couple of minutes ago as well, and we are nearly in our entry. And Chaos and I were having a debate on Render the other day. We were discussing levels, and for me, my entry on Render was about 5.22 is what we were looking at, and Chaos liked it all the way down to about 4.8. Okay, so you can see we've got a lot of confluence there. And at the moment, if we get some kind of reasonable sell-off here and they don't try and completely end the markets, then 4.8 should hold for you. And at the very least, you'll get a close above that And that is where you're going to look for some kind of bounce play. And then again, you can see my oscillators on the 8-hour that is also printing possible reversals. This thing's getting exhausted here, and it is telling us it does want some kind of move to the upside at some point. So I was explaining on the show earlier, and we were looking at Brett and we were looking at Pepe and those types of things who have taken absolute pain over the last while. And what we can tell is that it's a matter of time now before we get the reversal. It's difficult to predict how big of a downside they can still expect. It could be another 15, could be another 25% if things get ugly. But in terms of time, the pain is nearly over. And I want to show you this Pepe chart because it is looking pretty interesting for us from that respect. Let's take a look at this thing here. This guy. Okay, so this is Pepe on the 3-day. And what I wanted to show you guys is this oscillator on the downside is getting exhausted. And it's on the verge of printing some pretty bullish divergence here on the 3-day. And is Trump live?
Apparently, that's why I was jumping in here. If somebody has a link or something, I wasn't aware he was going live. Is he going to compete with this speech? Talk over Powell?
That would be very strange. Okay, send us the link there if we've got a link here.
Please.
Let's see if I've got is anything in the newsroom here. So remember, guys, if you want to track the latest news, you can jump into Banter Bubbles, and it's as simple as clicking the newsroom. Now, some of the top researchers in crypto are in here, dropping alpha. I bet you guys didn't know this. So you can get all the latest things. If you're looking for information, what is happening in the market, and these guys are way faster than tracking Twitter. Look at this stuff. It's all flying in here. So this is basically all you need, your newsroom here. And they're going to keep you updated on all these things. On top of watching the pricing, you can see all the stuff here, all the good stuff that you guys are going to need is sitting here waiting. Fran, tell us where Trump is here at the moment. I'm actually looking in the newsroom here on my other site, and we can't see anything yet.
I've got a little blurb here that Chaos just sent me from the 𝗙𝗢𝗟𝗟𝗢𝗪 letter, just saying that the summary of the Fed decision today, that the Fed leaves rates unchanged, pausing the Fed pivot. Their decision to cut or to halt rate cuts was unanimous, 12-0 vote. They say that inflation remains somewhat elevated, unemployment has stabilized at a low level, and their progress towards 2% inflation has been removed from the statements. So this isn't looking great so far.
That is not what I wanted to see. Okay,
No.
So far. Okay, so that is not a good thing. So he's definitely going to be quizzed on this part getting removed. That's going to be a big question, and how he answers that is probably going to decide our fate. And it's probably going to make us regret closing some of those.
Get the red button ready.
Look, it's going to be spicy, guys, but I don't think we're ready to react just yet. I think we got to let the man have his say here, because other than that, we're going to get a little bit of chop here. I see 𝗫𝗏𝗟𝗏𝗪 has also posted something here on Twitter. Let me see if I can bring this up for you guys. And the committee will continue reducing its holdings of treasury securities and agency debt and agency mortgage-backed securities. And 𝗫𝗏𝗟𝗏 is laughing. Let me show you this tweet here. He's saying QT will continue. Okay, so this is not a good start to my day. Okay, because I think I closed a couple of shorts live there about an hour and a half ago. So things are going to get spicy here, and that's 𝗫𝗏𝗟𝗏𝗪 now having a look at that. James, can you find that Trump link? Can you drop it to me? Let's see if we can pick this up here. Okay, I'm trying to get hold of this Trump link. If he's live, we'll get it. We'll get it. Okay, let's see if we can pull this up here. It's coming in hot. Okay, now why would Trump be live?
You got it there?
Here we go. Fox News live. Trump signs new executive orders, ICE raids, Duffy confirmation vote. This must be it. Let's see if we got it here. Okay, let's see if we can bring this up.
Washington policies and restored common sense and sanity to our government. We've unleashed American energy, and we've already achieved record low illegal immigration. As you see, there's no
James, sound okay?
in. And that's what we've been waiting for a long time, and gotten woke ideologies out of our government and out of our military. The water has now begun flowing in California as we continue to increase the flow in coming days. Nobody's seen anything like that, and I've also taken strong action to regain control of the Washington bureaucracy. Just for clarification purposes, because it was incorrectly reported yesterday, we have informed the federal workforce, which they've looked to do for many years, that if they're working for the federal government, they must show up to the office on time and on schedule. We don't want them to work from home because, as everyone knows, most of the time they're not working, they're not very productive, and it's unfair to the millions of people in the United States who are in fact working hard from job sites and not from their home. As federal employees, they must meet a high standard. They're representing our government, they're representing our country. If they don't agree by February 6th to show up back to work in their office,
is this a fake Trump, James?
And we will therefore be downscaling our government, which is something that the last 10 presidents have tried very hard to do but failed. Most of the people we're talking about have not been going to their federal offices in many, many years, from even before COVID. But they have nevertheless been paid. Some have worked, some haven't worked, and most of the studies say that some have just gone through the motions. We may ask these people to prove that they didn't have another job during their so-called employment with the United States of America, because if they did, that would be unlawful. As you understand, a lot of people are getting paychecks, but they're actually working other jobs. So they'll have to prove that to us, that they weren't. In any event, we're requiring them to show up to work or be terminated.
Deep seat Trump.
A very substantial number of people will not show up to work, and therefore our government will get smaller and more efficient. And that's what we've been looking to do for many, many decades, frankly. Thank you. In addition, there was a short-term pause or funding freeze on certain discretionary spending payments, such as government grants, only for us to quickly look at the scams, dishonesty, waste, and abuse that's taken place in our government for too long. As was explicitly stated, this in no way affected Social Security, Medicare, Medicaid, or other entitlements that Americans depend on. I've made abundantly clear from the very first day that I ran from office, that was a long time ago now, that's 2015. If you think about it, I announced in 2015 and we won in 2016. We did very well in 2020, but we did really well just recently. And I'm restating right now to correct any confusion that the media has purposely and somehow, for whatever reason, created. Social Security, Medicare, Medicaid have not been affected by any action we're taking in any way, shape, or form. We are merely looking at parts of the big bureaucracy.
Guys, let me know in the chats if you want to listen to this one still. I've got 𝗙𝗎𝗟 letter also confirming that they've removed that specific line about inflation making progress.
Being sent to Gaza to buy condoms for Hamas, 50 million. And you know what's happened to them? They've used them as a method of making bombs. How about that?
Okay, if you desperately want this back on, we'll slot it back on for you. But I think in the meantime...
I don't think we need the condom bombs right now. I think we're good.
Okay, so in the meantime, okay, let's see. Where's JP? Let's see. Okay, he's not here yet. Okay, so we're gonna wait. We're gonna wait for him to arrive. And Laurie says this is the shittest market ever. it's not a good vibe, is it? It's been a rough ride. And if you look at something like even Render, okay, the golden AI token, the token of the golden age of the AI narrative. Look at this thing. Absolutely taking blows out here in what is supposedly a bull market. So I mean, you can't be, don't be, don't be too upset with yourself. Everybody thought it was a massive bull market here on some of these alts. So yeah, surprising, I think, all across the board for everybody. But in terms of getting bounces and in terms of things like that, we can play these charts all day long. Okay, so the alts have sold off heavily, and it depends what happens now when Powell comes out and he starts talking about this little comment that the KBC letter have now also confirmed here. Let's just add this one to the mix quickly for you guys. And we're going to see how he words this and how he phrases things around it, because this is obviously going to be a big thing for us now. So the biggest tell that the Fed is worried about inflation. The removal of the statement, inflation has made progress toward the committee's 2% objective. Okay, so that is obviously going to be all over the news. And Chelsea is fully out of altcoins today. Now, on the back of this headline, I'm a little bit jealous. I think you nailed it. I think she absolutely nailed it. It remains to be seen. Let's take a look at our charts here. And pressure for BTC at the moment. The Dixie is up, but consolidating. S&P dropping. And look, the big test is on its way, guys. And Crypto Keeper says most alts I hold can't go any further down unless we go negative. But that is that is the extent of where we are on some of these altcoins at the moment. So what I want to say to you guys is that the amount of selling, especially on things like some of these meme coins, has been so brutal. Okay, and we obviously can't say how much deeper they're going to go, but from a timing perspective, a lot of the time has been done now. And we are moving closer and closer every day to that big snapback reversal. It's just a matter of time here. And everything trading following SPX says Carl at the moment. Okay, let's see in the chats how everyone else says. I see Adams. Yeah, he's just laughing. He's just laughing at the moment. And Maria says she'll buy back Render under 5. Look, 4.8 is the level we wanted. 5.22 to 4.8. And let's see if we get a reversal in that. And Janet, yes, unfortunately, AR is making a lot of people sick at the moment. Let's pull up that AR chart. That's quite a key one for us, because AR might be on its way to $7 or $8. Okay, so let's take a look at that. And let's talk around AR while we wait for JP. It's 5 more minutes. Let's look at our weekly on AR. And you can see what is happening here. So there were 2 main weekly levels that we've been tracking, and there's obviously been some heavy selling in AR in the past while. We know this was the golden token between January and May last year. Nothing could go wrong with Arweave, and now complete selling. So for me, if it doesn't start bouncing around about this region, your next target is between $8 and $7, and that is where your buy zone is going to be. So it might not make its way down there in a straight line, but it's a matter of time then for it to go. And our fiend's going to buy it at 0. I mean, that's probably a good buy then. And Pengu is taking a little bit of strain there as well. Look, guys, I think all your alts are going to be under pressure. Remember, one of the easiest ways that you can get chart updates is to be part of Chart Hackers, because every show that I do every single day, I put those charts straight into Chart Hackers, and obviously I post setups and trading setups, long-term and short-term, and we've got an amazing trading team in Chart Hackers. So it's quite simple. If you want a taste of these charts and all these things that we do, you just go into the show description, you click on more, and you're going to find Chart Hackers there. And what you're also going to find at the top of the list is this accelerator school of mine. Now, if you're looking at all these charts, and I know Run normally does the FOMCs and things, and he doesn't really do much charting. But if you're looking at what I'm doing here and you're saying, how does this guy figure this out? Why does he know this stuff? This is how you do it. Go to the accelerator school, and I'm teaching you in a very simple way that in 10 days, you'll know exactly what I'm talking about and exactly what I'm doing with Chart Prime as well. So you're going to get a full breakdown of all of that stuff. And my next masterclass is in 4 days' time. It's on Monday. So we had a great masterclass a couple of days back on Monday, and we looked at some basic things. And this following Monday, I'm doing advanced leverage. So as long as you have done the course and you are registered, you will be able to do advanced leverage with me in the masterclass this coming Monday. Okay, so I see NZ Danny says the school is amazing. Okay, come jump into the school, register, sign up there. You just go under the show description and I'll show you all the tips and tricks, all the stuff you see. And Lindy says the market is terrible. Lindy, I concur. Again, lots of concurring here. Okay, 25,000 people loaded up here on watching the Fed Reserve. And we are going live in a couple of minutes. So 4 more minutes to go. It's okay, dude says dominance took Viagra. Let's take a look at dominance. Now, dominance is a concern. Okay, it's an actual concern for us. And there were 2 main zones for dominance where we need some kind of relief for our altcoins, and it's either here, like right now. This is either a fake out right now, and Powell comes in and saves the day, and we get this reversal in dominance, or Bitcoin looks like it's going to be dumping potentially, and we're going to go 61.5%. And what happens between this zone and this zone might not be that pleasant. Okay, so that's a ride. So if you've enjoyed the alt sell-off from here to here so far, that's a 1% move in dominance. Imagine what dominance can do if Bitcoin is flat or dropping if it goes 2.7%. Okay, so that's going to take us, it's going to take us to some dark places. Okay, we're very, very dark places there potentially. So let's just make sure we are prepared. Ondora says the market is panicking. Look, it's this is typical panic now. It's up to Powell to come in here and calm everyone down. Okay, he needs to slow it down. Marty Party tracking Binance wallets dumping. Look, it's panic sell. Okay, guys have seen the headlines, and I think Frank summed it up pretty nicely there. Good summary there on the market, Frank. And, and Ray Panda says, brother, fuck me. No, it's rough, guys. It's proper rough. Let's take a look at some charts here. Okay, Brett, while we're waiting, we got a couple of minutes left here, guys. So let's look at Brett. So you can see this is still holding a degree of support. So there's been a lot of selling today. Again, we don't need to panic just yet. We've got Brett. Anything down to about 71 looks okay to me. You need a backup zone. If the market shits the bed again, your backup zone is going to be around 62, and that is where you most likely get a snapback bounce on Brett. So it's either going to be 71 you're watching or 62, 622. And guys, you're stressing in the chats here. Eh? The boys and girls are stressing here. Let's not be too stressed.
This is getting rough. I got something here. I got to turn the mic off, camera on, okay? Just a sec. We need some help here.
Where are you going? What's going on here? Oh, there we go. There we go. Get the tinfoil hat on. Tell us what's going to happen now. Okay, tell us what's going to happen now. We need a thorough explanation as to what is going on here.
I got my tinfoil hat on, man. We need some fucking help. We got to have a miracle here with Powell.
Come on, we got 32,000 people stacked up here watching the Fed. Yeah, they're ready to go. So we're a couple of minutes here. One more minute. Guys, hang in there. Let's not panic. Look at all the swearing in the chat.
I know.
This is quality. Okay, here we go. Let's turn the music down. Let's get this going here. Okay, action time. This is going to be one hell of a ride.
Uh-oh. Yeah,
Dixie up.
Charts
Dixie on the top right. S&P bottom right. Bitcoin on the left there. James, can you hear this?
No volume, no.
My colleagues and I
Can you hear that?
There we go. Yep.
Focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures.
So that's pretty good.
Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Ooh. Okay. Let's see what he has to say.
Chairman Steve Leishman from CNBC. Mr. Chairman, at a event in Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a three-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that?
They had to ask this.
What effect, if anything, does a president making these kind of remarks have on policy? Thank you.
Three questions. I'm seeing it really as one question though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work. And that's how we best serve the public.
Can you just comment on whether he's physically communicated this demand to you?
I've had no contact.
Thank you.
Thanks.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we literally look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up. Does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So
Pumping.
I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal. And that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance. And I'd say you look at the last couple of inflation readings and you see we don't overreact to two good readings or two bad readings, but nonetheless, the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to related to the labor market.
Wow.
We just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was
see
another
total 3
reading, I guess, just before the December meeting. So
printing bullish divergence here. There are signs that it wants to push.
We're not.
Well, everything's pushing at the same time here. What exactly did they like out of this news? Nothing has sounded wonderful so far.
I don't think it was as bad as expected. He was quite calm about the job market and things, and
I think everybody had this Trump expectation that didn't play out. Was the initial disappointment.
A number of measures rise sharply, which has in part been linked to tariff concerns. But there's
Soul
also
going up, oil pumping.
terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, and actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we
S&P turning green, Bitcoin turning green, Dixie dumping, which is what we like.
Dominance dumping too.
Fiscal policies are actually going to be.
Here we go.
Don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum.
This is really what we need here, guys. You want this fake out here?
And
this had to be the fake out, and then we want to just send this down. That's going to help all your altcoins.
Economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder. And meaning, plausible. I'm
going to give you some Bitcoin topside levels you can look at.
And so you're just on hold, waiting to see what comes down. It's a very large economy, and policies affected at the margin. But we're going to wait and see.
If I can follow up, the idea that you feel the economy, policy is restrictive, suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on,
this was the target.
Looking for data that tell you that you can cut,
Went
or
straight
data
up there.
that will tell you you should hold?
We're looking. It's more the way it works is we are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy is in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And, as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
𝗙𝗢𝗟𝗟𝗢𝗪 with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available. And as has been our practice over many administrations, we are working to align our policies.
I think the market was really expecting the worst there. And I think they're quite relieved now that he's come out a little bit more relaxed about things. Look at this Dixie dumping.
I'm seeing the researchers on the back end here are quite happy with his responses too. They're loving it, saying he's handling every question perfectly, and he's in general quite dovish that this is better than expected.
An Office of Minority and Women's Inclusion.
So I did mention consistent with that.
I'm just here for the comments.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just to follow up.
Oh, this fucking render.
What reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else.
Sweet.
And that's, you know, lots of research shows that's the best way for a central
Ondo
bank
is going to blow you, guys.
That'll give us the best possible chance to achieve these
This is
goals
Ondo
for
on the
benefit of
daily.
American people.
This is
That's
big
always what
resistance
we're gonna
here.
do, and
If it blows that area, there's a
confidence
big
in that,
move
as
coming.
I said a few minutes ago.
You've said that the Fed is in wait and see mode based on the policies that come out of this
1.5.
administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see their alternative simulations. So that's what they do. It'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the uncertainties that surround us. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it was, you know, it changed everything.
This is USDT dominance.
So things happen, and but yes,
we want this to close under this 50-day.
It's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. You know, last month you talked about a future rate cut as being pretty, you know, significantly predicated on more progress in
This is
inflation.
the last meeting until March. Simon's just saying here on the back end that this is the last meeting, so this will set the tone right through March until the next meeting. They're all thinking this is good on the back end here.
Further progress on inflation.
You're going to pump in February.
And, you know, the story's there. It's
February, March. And then maybe you get a cut then.
The data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And
you think we dump after the meeting? I keep seeing people ask.
We think we
retrace some of this move.
I think a lot of it gets retraced, and then it gets digested, and then the real move comes. But all you want to see is these alts hold their lows. That's really what you want to see.
For PC, you see that coming down pretty steadily now. And that's the place.
Careful riding those green candles, everybody.
A big part
Chances are they'll come back at least temporarily.
Non-market services, which don't tend to send much signal. So you can look through all that, think, okay, that then we seem to be set up for further progress. But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. But remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you know, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. So it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good, but if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance. When you
I love that.
An unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, now you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?"
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Chris 𝗙𝗢𝗟𝗓 at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Read Bernie's comment here on the top right with regards to the removal of the inflation statement. Bernie in the newsroom.
What does it say?
He says he's just commented on this not to be read as inflation is picking up. Rather, it's a wording cleanup as they feel strong about inflation coming down. I mean, how do you polish a turd? I mean, look at that. Yeah.
Well, and you see this in the comments, people talking about looking at Cynthia Lummis and her comments.
From the NGFS.
She's just tweeted about this Czech Republic likely to buy 7 billion in BTC for a strategic Bitcoin reserve.
Very significant.
And she's saying if we snooze, we lose. We need to get on this immediately.
Diversity and things like that. In addition,
let's find that tweet.
The work of the NGFS is
I've got it here if you want me to send it to you.
Could you send it in our chat?
Mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times. And I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here. And this is when we got it and voted on it. So And I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't, it's not right for the Fed.
Andrew.
Thanks, Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. You know, we're somewhat above that, as you know, and you know we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see. And consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course. As I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
It's not the best.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed? Sometimes, never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, 𝗙𝗢𝗟𝗟𝗢𝗪 said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry,
what sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that
Altcoins flying
at it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences.
I'm really just here for the comments.
Range possibility is very, very wide. We just don't know. And I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2000 and I guess 2008 18. Yeah, we didn't really know. And again, the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
God, these questions are taking forever, but I think so far the market's enjoying what he has to say. I think they were bracing for something rough, and so far, okay.
Well, these things take forever to get through the finals, but yeah, it seems like the general reaction's in.
And then the second question is just,
unless they come up with something insane.
prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
This is cool. This is important.
So let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although of course we're all watching it with interest.
Simon Rabinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think
long flush. Yeah,
they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
You know, I want to avoid commenting even indirectly on the conduct of tariffs. You know, it's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, you know, we found in 2018, there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets?
Great hair, spectacular hair.
Market valuations factor into questions about potentially lowering interest rates further. Is that something that's in the back of your mind?
There he is.
We look from a financial stability perspective at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But you know, we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Victor.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Big moment here for Ondo.
Well, the things we discussed earlier. One is that there's a low.
This is where you short it,
and so that
or you look for that
pop.
pop.
Be a spike in layoffs if companies were to start to reduce headcount. You would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure, and in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see, there's nothing in the data yet on that. But you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet, but yes, you hear it anecdotally.
Nick. Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today. And I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this, uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way.
Sure, it's a lot of questions
today. Things in a normal
God.
distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing.
Keep saying good labor market. I would assume as in healthy. That's obviously pretty good for us.
Well, the chat just keeps saying that's horse shit, of course.
But I mean, it's generally, I suppose that's quite a nice statement.
Price level went up a lot.
Is that the technical term?
Feeling that?
Horse shit?
Yeah.
Yeah, I think so.
So the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are, not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I don't think, I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy is strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts.
It's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, continued progress with housing services inflation. You're going to want to see inflation behaving.
Can you just answer? Wasn't the question, are we going to get more than one rate cut?
That's what it's going to be. And I mean, is that better than our expectations? If we expect to see that, it's just a question of when.
I mean, it's as usual. He can't commit to anything, right? Otherwise, they'll eat him alive if he varies from it. So he just normal political bullshit, beat around the bush.
Target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it. If I'm being at all unclear, we're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation.
S&P is actually flat at the moment. Bitcoin's the only thing. There might have been a squeeze out of Bitcoin. Yeah.
Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said what we said was that at times when inflation persistently undershot 2%, we would likely.
This is quite a big short zone here for Ondo as well.
For some time. That's what we
if you're not feeling that he's done enough here, this is a big rejection zone.
There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that's what we should do. The framework had really nothing to do with the decision. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Go to Mark for the last question.
Hello, Chairman Powell, Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households,
looking for shorts on Ondo, it's candle close as long as you're below 1.49.
That speculation in this
So if you close above that, then it's probably invalidated.
Or do you think it has a place?
But if you're looking for a short here, look for a candle close, say above 1.54 to be safe. Give yourself some room.
To look at with crypto really is to look at the banks, and we think it's. Banks are.
I'm going to close my Ondo long at this resistance here. I'm long down in the X. I'm going to close that.
Can manage the risks, and it's safe and sound. A good number of our banks, right, that we regulate and supervise, do that.
Another handbag.
Threshold has been
There
a
we
little higher.
go. Okay, Ondo long is closed at resistance.
And that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
What do you make of those crypto comments there at the end? I think that's why they were getting cross with me. So look, guys, I think he came in a little bit more dovish than expected. I think the market was expecting the worst there, especially when they crossed out the inflation information. And he's now come and softened the blow there. He kept telling us the labor market is good. I mean, did he say it was healthy? but it wasn't as bearish or as hawkish as I think everyone was expecting. So, for me, the real test now is going to be what happens in the next 24 hours, how things get digested here. But I'd say if we had to take a measuring tool here, that wasn't the worst. I think we could have had a worse result.
It could have been worse.
I don't know. What do you make of that one?
Well, everybody needs to keep in mind too that the Asian markets closed today, right? I keep seeing in the comments, they're like, oh, Asia's going to pump it. Asia's going to pump it. They're closed for the new year. So we don't have Asia market open to do much with this. It's just going to be what low volume retail's left. Just to keep that in mind.
Okay, so we could be a bit short on follow through later on. So the real test again, we got to wait till tomorrow, Chinese New Year, obviously. So yeah, there's a lot going on there. I think in terms of a couple of setups and things, guys, I just want to run through a few charts for everybody here, especially the traders out there. Let's cover a couple of charts for you quickly, just so you have a rough idea. And then obviously hackers, traders, all the charts from my show earlier are still valid. Those are sitting in Chart Hackers at the moment. So all the hackers members, you can access all my live show charts in those areas. So, okay, Annie Burden Unquenchable says Ondo 1.52 is coming. Yes, look, I've closed my Ondo long. Just let's run through that trade because it was topical while this was going on. Yes, this is resistance. Okay, we can pop further. If this thing blows this region here, you are looking at 1.62. You are looking at 1.73, and you're going to be using that 50-day moving average as your support marker. Now, I've been in Ondo probably from down there somewhere. So for me, made profit at resistance, the press conference ending, for me, it's a TP zone. Okay. So I've closed that one. I've banked the longs. Obviously, there's more to come here potentially. If Ondo starts ripping and you're not in it, I mean, it's dangerous to enter Ondo now. You can see, we had a nice entry earlier today. In fact, I actually dropped this in the chat in Hackers earlier today. We were looking at that, the VWAP, the 382 as your support. So that is actually going to be your safest region that you can use, which is going to be today's low. So call it 1.3, call it 1.38, 1.39. That is your Ondo support realistically. So if you're jumping in now, you are obviously taking on risk. Remember, that's your risk, 7%. So if you're trading leverage, you're immediately taking on a 7% there risk on Ondo, and then you upside, you've got danger zones here, 1.5 up to about 1.53. Now, let's quickly run through BTC. And just in terms of rejection zones, this is what we looked at earlier. And you can see we had a nice rejection in that area first. And, that was the big one. Okay, so it was 104. And what is our next stop? Where's our next region? Your next realistic zone? We take out that wick. So call it 105,300 for me. That's your next potential rejection zone. And then upside 107 is pretty much what you're looking at. You can see a stack of wicks there to the upside. So be cautious here. If you are jumping in, you are putting yourself at a little bit of candle risk from the lows. XRP, James, you must be loving this. Dropped into our zone from the show. I mean, this was perfect, actually. Dropped into 3. VWAP 382, there you go, 3. So anybody that watched my show earlier, you would have seen that was the level we were talking about, 3 for XRP. Hopefully some of you guys did grab a couple of entries there, and you can see bullish on the 1 hour. That thing is now starting to turn to the upside. So there could be a little move coming for XRP. That is definitely something you want to pay attention to. Render, Chaos, are we getting this 4.8? Are we coming back?
I'm not sure. I think we might be going up. What do you think? If we get 4.8, we go out for beers. Simple as that. We're going to be
orders stacked. Okay, I was ready to go down here. Anywhere here, I was stacked and loaded. Fuck, a little bit disappointed. Okay, we didn't get the full stack here, but you can see this wick, folks. So you can see there's a big, strong 12-hour wick now on Render, and this is going to be applicable to many altcoins. So you might find yourself in a situation where at some point they're going to come back and clean out some of the wick and then send it up again. So, this is not conditions to now get super euphoric and whatever. All we've done is dodge a bullet so far. But what we do know is we've had reversal signals brewing for the last couple of days, and a lot of these altcoins are talking reversals on 8-hour, 12-hour. So things from that respect are looking a little bit better. The dailies were still under a bit of pressure. But, in terms of, say, Pepe on the 3-hour, on the 3-day, this thing's about to print some serious bullish divergence here. I mean, this is quite intense what's going on here with Pepe. Doesn't mean it can't come with a little bit more downside, but in terms of Pepe, your big support is your low for today, 113, and then the big level is 107. is what I'm watching for Pepe. Those are your big ones. And let things digest a little bit. Brett, you know, we were suspecting that it might have bottomed out in this region. On the 3-day chart, you can see nice, strong reaction zone. That thing's also looking a little bit more bullish there for us. Let's look at SUI. That was one we touched on earlier today. Okay, SUI, nice bounce for us as well. So our 3.4, 3.5 has held up as support. So that is what all you need to worry about at the moment. You can see 12-hour looks very similar to these other alts. We're getting this reversal now, and we're getting that reversal print. So long may this continue, and that will send us up. DDA, if you're buying spot, okay, and on these types of zones, it's okay. You know, I mean, you ideally just want to be DCAing on the good zones on these types of things. So if you're buying spot, Pepe down here, that's fine. You know, at some point it might come back to this level, but this 102 is a massive zone, and I'd be guided as a spot buyer or a hodler. I'd be guided by what I see here. And what I see here is a 3-day that is getting ready for a sustained move at some point back up. Okay, so that tells us, you know, this could be a spot play building for you. If you get a little bit lower, even a bigger bonus for you if you're getting it at 10, for example. So yeah, not the worst idea. Let's go Tao. So yeah, that hit a couple of areas here. So Tao could be a bit of a dark horse coming. Now this looks very similar to Ondo. And we can see Ondo pushing into the 50-day MA. In fact, these charts look pretty much identical. So as a Tao trader, you just want to see this thing pop. Just like Ondo, you want to blow the 50-day moving average as soon as we can close above that 50-day MA. So if we can close above this 475 region, then we should be okay. We should be locking in a couple of higher targets. I'm talking 560, I'm talking 610, I'm talking 720, those types of levels there. So Tao looks healthy at the moment. Let's go. What else we got here? Sui, Ondo. Oh, I don't even want to talk about this. Show me
if you want to look very. I've got Link, Lido, and Near,
give me some Link.
And also Sonic. They've all.
Give me some Link and Lido.
Do you want me to share?
Yeah, give us Link and Lido here for the folks.
1 second. I've been through 30 coins, 35 coins. Where are we? So S has just blown straight through the block and is now moving up. Link exactly the same, but look at this. It's really pushing up now to the next resistance point. This is on the 1 hour, by the way. I've zoomed in today. I don't normally trade the 1 hour, but you know, we want to see what's going on. And Lido, look, same again, collecting orders, whether we reject and come down and find a level and then go again. We'll have to see. But at this point, these are showing good strength, these three. And then for the yucks, there's Say as well. But that's not quite as far in front. But for me, probably Lido, I think, is probably the one that I'm looking at now. Looks good.
You want to send this thing higher? You want to short it?
I'd like to see it come to the top of the block, reject, and then catch the next move up. That's what I'd like to see happen. So I think there's a short brewing, but it might just blow through. So we have to keep an eye on it. 1.956 roughly. Look at the strength this is showing though. Look, straight up. You know, normally this thing hangs around, right? It's just, you know, let's just wait and see if a wick forms here, or if this just candle body keeps going straight through the block. You'll probably find out, I would have thought, in the next minute or two. But yeah, Lido, Link, and Sonic as well. I thought this
I've got
was
another one for you guys here. I dropped this in Hackers earlier today. Virtual. Okay, there we go. Guys, this could be a long here. Something to watch. This is Virtual on the 1 hour. I dropped this in Hackers earlier today when we were here somewhere. And I said, you want to look to buy on weakness now. So I don't have my full position here. I've just got a small one on Virtual. But this thing's looking a bit more promising now. I also like its little inverse head and shoulders there at the moment there. So that could be something to watch. Inverse head and shoulders on the 1 hour. Trend break. Targets 2.23, 2.67, 2.98. Looks nice. And I see Crypto 𝗙𝗢𝗟𝗟𝗢𝗪 is talking all these things here. Griffin, AI16Z, AI agents could be waking up. Okay. Nice. Good. James, any comments there? Did the tinfoil hat work for you?
Well, the outcome did anyway.
Yeah, it was nice. I mean, I was at one point there, I was like, ooh. Yeah. So I think, guys, sorry, carry on.
It looked quite ugly there for a minute. Yeah, it did not look good. And that's, you can see the chat flip completely bearish. It's all over. We're done. We're cooked. It's that's it. I'm selling all my spot. And now everybody's like, fuck, it's pumping. Let's fucking go. We're a very emotional bunch, us traders.
Okay, guys, thank you. That was fun listening to Joe Powell. Sometimes it's not the most exciting thing, but I think we knew they weren't going to raise, we knew they weren't going to drop the rates. Okay, I think that was fair, but you can see there is some pressure somewhere because he came out quite soft and the market was absolutely shitting themselves before he started talking. So a little bit to my relief as well, because we closed some shorts earlier. Yeah, guys. We're going to keep you posted, obviously, in Chart Hackers. If you don't know what Chart Hackers is, well, here's 2 of the team in there. Okay, and there's probably, how many of us? 6, 8.
Yeah, loads.
Okay, so there's 2 of the Chart Hackers team. Jump in there. We'll look after you. The link is in the show description, and we'll take you through all things trading. Guys, just be safe. Okay, try not to chase these pumps, boys. Thank you for hanging.
Cheers.
Later. Okay, don't chase pumps too hard. Understand your risk is at least your 1 hour or your 2 hour candle low. That is your reasonable risk there as a leverage trader. And look out for things like Ondo, major resistance here. Tao, major resistance. Bitcoin, watch those resistance zones I've given you. Play safe, okay? Nothing wrong with some hedge shorts. If your longs are all printing now, look for hedge shorts at some nice regions. If they blow through, well, that's good news then, because then your longs are absolutely cooking. Okay, guys, be safe out there. That was my second stream today. I'm going to take a break, but I'm back tomorrow. See you later.